Welcome back to my YouTube channel for the weekly US30 breakdown. Let's get it. So guys, let's jump straight in. So last week found us closing down here, bouncing off this weekly resistance turn support level. And also keep in mind it's 50 EMA, okay? So this week, we can see that we've pushed back up, as we mentioned that we may do last week, to this weekly resistance level. Let me just quickly highlight that now. So this was previous support, turn resistance now, but we've broken just above it. And now we're on another weekly level, which was this support again, turn resistance, turn support, and resistance, turn support again. Two touches here, and another touch here. So we're bouncing in between these two levels. Okay, we're going to delve deeper into this when we go down to the weekly, to the daily and 4 hourly and hourly time frame. We can see that the weekly candle has lower volume to the previous week. Okay, as you know, if we were to turn bullish and start heading back up to all time highs, this bullish candle would have had to be a lot bigger again, which gives me the indication that we're still bearish in this market. As you can see that when we are bullish, when we're turning around, you can see that the bullish candles on the weekly candles are always bigger than the previous bear candles. When we turn around, when we've got confirmation, they're always bigger than the previous candles. We always move up within 10, which we did not have in this week that just went by. So if we go down to the daily now, we can get a better look at how last week transpired. So I mentioned last week, because this was the last candle of last week, Friday, that we didn't get a clear big bullish engulfing candle to show me that we were going to be having long-term bullish momentum. There are some other characteristics as well that US30 has that would have indicated that we were going to turn around to go bullish again back to all-time highs, which we haven't got. And of course, we can see that we've had a clear break of these lows. So this is indicating that this is a bear. It's still a bear market. It's still a bear trend on the major time frame anyway. The daily resistance zone, you can see as on the weekly that we highlighted, this area here, so 42.5s. Yep. You can see that that zone has been a heavily held zone. You can see how many days it took just to break past it before when this was all-time highs. You can see it also in another touch here for support, broke below it, turned resistance, broke above it, came back, turned support. So you can see this zone is really hard to break past. Another one, two, three, four candles before we finally broke below it. We've had two touches into it now, so we're literally just bouncing in between the higher support and the lower resistance of these two zones. You can also see now that the daily is ranging. Usually, when you have a trend on the Dow and then you have ranges, usually it's an indication of the market possibly turning around, which again helps us with our bias of being bearish in this market still. Usually, when we start to range, there's a good chance of turning around, especially when we're at near a very key level. So this again could be indicating the end of this bullish retracement. So you can see these candles as we're ranging. You've had the first push up to the resistance level. We've had the drop down to the support level. You've had Friday, which is rejected off that level and pushed straight back up into this ranging zone. So this is the zone we're working with. Okay. So keep that in mind. Also, keep this candle in mind because this is where last week started. So let's just put a line here. So we have that clear when we go down to the lower time frame. I'll make that red. So let's go down to the 4 hourly now and see how the week was moving along. So the 4 hourly, we're ranging, but we still have strong bulls. So let me quickly just get rid of this box. But as long as you know, keep this in mind that this is the range we're working with. So this was the way momentum moved because last week found us here. Okay, these are the levels we were holding last week, and I expect that we might roll over from here and roll back down. However, we carried on pushing up to create high highs and higher lows on the 4 hourly time frames now, but we're still below the bearish, the daily leg of this last bear leg, this last impulse leg. Yep. So we've had this push up, a minor small retracement, this push up, retracement, another push up, and now we're ranging. You've seen it drop down, reject, and drop down to the same base of this 4 hour range, and now we're heading back up. So of course we've got a very good indication that we're probably still going to come back up to these 42 levels, 42.6, sorry, this area here. What we're seeing is, let me just quickly get rid of this arrow. What we're seeing is we still have, even though we're ranging and we're holding this level, we still have strong bulls, stronger bulls than bears. If you take a look at how these candles are moving up, you're seeing that the 4 hour US session candles are still bigger than a lot of the bear candles that are bringing it back down. As you can see, this push up, US session, this push up, US sessions. So we still have stronger bulls, even though they're not strong enough currently to break past the 42.6 level. This is the level we're talking about where weekly started. 42.77. This might be a bit different than yours, but of course, in the candles, you can see this indication here. There's a gap, there's a small gap here where the market opened. If we're to maintain bears, we can't really break past this level because then we've gone past the weekly, previous weekly candle. So we can't go past the weekly candle bullish, but also maintain a bear trend, if that makes sense. It is possible that we can have the range in this area, and then price could still range and wick past this, wick into this gap, possibly wick to these highs, and then roll over because this is the last high. Because this is the last high before we then rolled over to create this new leg. Okay, so we can't break past this candle high or clean close above, should I say? So in this range, just keep in mind that this is the base. Okay, this is the base of this 4 hour range, and of course this is the high. So we can easily bounce between these levels. What you need to keep in mind is the bulls are still stronger than the bears. What you need to find, or what you need to wait for, sorry, is stronger bears and weaker bulls, and then you know, okay, we're setting up for the possible break of this level, so we can head back down to create new lows. Makes sense. So we're waiting for something like this. Prices push back up. It might do whatever it's going to do in this area, and then you want to have strong bears and then weaker bulls. Okay, then you can see the shift of who's controlling the market. And in that, you'll also see bigger bear candles and on the 4 hourly and on the daily as well. Okay, so that's what we'll be waiting for. As I mentioned, it's very possible to just come up and wick into these highs because this is where the week started. But we can't have clean closes above and then head back up if we're going to maintain the bears. Makes sense. And my bias is still heavily bearish on this. So any trades in this area here, just keep in mind they'll be slightly risky because you can see that you can easily wick out in different directions, up and down, and then it still continues in the right direction. So even though we reverse off this area, we're going to go bearish to bounce off this base. We still wick down, wick rejected up. Buyers obviously came in thinking, okay, we're going to continue to high highs. It did push back up, wick back down again. So it took out these sellers stops, added buyers in, and came back and took out the buyers as well. And then bounce off this base and it's pushed back up again, taking out all these sellers. So keep in mind that when you're in the range, it can be very risky and very sometimes it can be difficult to trade, or the Dow anyway, because it can wick both directions. Let's go down to the 1 hour now and see this price movement. So again, keeping in mind these highs, you can see, as we mentioned, look at the bull candles in the US sessions. Bull candles are much bigger in US sessions. Big US session candles. This is Thursday, 2 US session candles, when the bulls came in, and then the minor reversal. So you can see US opens, US pushes the market up violently, and then it reverses still in US session, but a lot less violently. So this is obviously the retracement leg back down to this bounce of this base. And again, Wednesday's market open, look at the amount of volume that came in. Now, keep in mind, after this bounce, okay, this is how you can tell when buyers are slowing down. This is the US session again. We've opened, but look at how we've had the candles form now. One bullish candle, bullish engulfing, retrace onto that previous candle high, and then another bullish momentum candle, then two 1 hour bear candles or small minor retracements. Then the next bullish candle couldn't even close or reach above the two candles before it. So you can see, yes, bulls are still stronger, but they're getting weaker now because if you see these candles, you can see that they moved up a lot more violently. One, two candles, one huge candle. So now bulls are slowing down. They're still stronger, but they're slowing down. So as I mentioned, you want to wait for the price to start slowing down. We want to have bears take over, to have violent bear moves, and then we have the weaker bull retracements, and then we can see that that's probably it's going to be an indication of us rolling over back down to the new lows. Again, keep in mind that you've got news on Monday, and then you've got CPI on Friday. So that's what we're waiting for. I'll be waiting for some sort of a bear move, consolidation, retracement, and then we can try and get back in for the lows. If we happen to miss that, which is possible sometimes, I mean, look at these candles when Dow breaks lows. You can see that it moves violently sometimes. So if we do break this space, With one bear move, I will definitely be waiting for a retracement to tag us back in, and then we can drop back down. Thanks, guys. Catch you in the week.